Do you worry that this is a start of a sustained period of either A, volatility, or B, a downtick in equities, given the valuation levels we're seeing around the globe? Or actually, is this a good opportunity to top up holdings?
That's a really, really good question. Thank you. Really, you go back to that question of inflation, because that question of inflation is, of course, related to normalization of rates and the taper equation. And that's really the top of investors' concerns at this point. My view is that the transitionary phase, if you want, of inflation will be longer, but it is still transitionary. And of course, we have different elements there that we could discuss. With this in mind, this will mean that real rates will be stable, but will not go up very sharply. So once this sort of first adjustment period, I think this is still a good environment to have equity positions, particularly for people who are lacking certain exposures in their portfolio.
Is there anyone left, Virginie, who is lacking exposure? I mean, I just kind of look at people's holdings, and it was a very good phrase from our guest earlier on, talking about the everything bubble. It seems to me that everyone owns everything they possibly can because of that central bank policy, the monetary policies that you mentioned earlier on as well. Isn't everyone loaded up to the gills, as they say?
Well, that's really interesting because it depends on where. You have to be really more detailed. You know, you want to build a very diversified portfolio, but if you look at what's happened in China, and if you think China, for example, is an asset class, you have a buying opportunity there. The other thing to think about is, what is the alternative? If your alternative is cash and you still think that real rates will be stable or not go up very sharply, you still want to be invested. So again, it depends. And the key thing is diversification, not only across asset classes, but in equities, particularly to make sure you have a blend of styles and long-term versus more opportunistic, positioning, etc. To me, the key questions to ask is, if you look at what's happening on the inflationary front with energy, is this a calibration issue with the short-term, events of storage, et cetera, and weather versus the long-term green transition issues that we are seeing? So that's one. If you look at the global supply chain, is this post-COVID, is this really just a COVID disruption, or do you have, because the world has changed in terms of digitalization, et cetera, if you think of chips in particular, do you have something that's longer term? Similarly, in terms of labor supply, do you have a fit given the way the world has changed, or will you have gaps? And then finally, China is slowing. We will have more, measures coming in, and that will be unfolding over the next 6 months. So all of this means, I think, that I am definitely in the volatility camp. I've believed that for a little while, but you still want to be in equities.